China's consumer prices rose 2% in January from a year earlier. On the phone with me to discuss this, as well as the recent string of positive trade data and the attention it has brought to the Chinese economy, is Raymond Yeung of ANZ. Firstly, Raymond, can you tell me what factors have driven this data?
We've seen the 2% growth mainly driven by the rise in food prices that has climbed to a record high. Although, this year the Chinese New Year fall into February, so we have also a base effect that has affected the overall headline growth of the CPI. But going forward, we do think that the Chinese economy is going to face increasing inflationary pressure because economic activities have picked up quite nicely. At the same time, we also know that today China has also released its import and export data that also reflect the robustness of the China economic recovery over the past few months. It seems that if the current trend continue, then China will face increasing risk of inflation.
There have been some claims that this data is slightly distorted by the timing of the Lunar New Year holiday, which falls in February this year and was in January last year. With Chinese data currently under scrutiny due to a run of better than expected reports, how much is this likely to fuel the flame of uncertainty currently surrounding Chinese data?
Well, the different timing of the Lunar New Year did affect the headline growth because last year there were only 17 working days, but this year January has 22 working days. So this difference can be attributable to the change of the headline growth. But the Chinese authority and the Chinese custom has also adjusted this festival and holiday effect. And if we adjust for this effect, we saw that the January export actually grew quite nicely at 12.4%. So it seems that even though the data was distorted by this New Year effect, but in reality, the trade performance was actually very good and very solid. That's also in line with and consistent with what we saw for the port throughput data. That can also reflect that the trade performance of China has been very well.
If we combine this with boosted import-export data also released today, as well as PMI data hitting a 4-month high earlier this week, what overall picture are we getting of the Chinese economy at present?
We think that the economy is recovering, although at a modest pace, but we do expect that in the first quarter of 2013, we could see a GDP growth of about 8%. And given the fact that under the new political leadership, China is determined to push for this urbanization initiatives to boost up the economy and also to boost the domestic demand. At the same time, there will be a lot of reforms initiatives going on in the domestic economy. So we do think that China's economic performance will be very solid for the rest of the year. And for the whole year, we are still projecting that Chinese economy will grow by 8.1% for the year of 2013.
Business reports have highlighted the rise of the Chinese yuan as many multinational organizations are now seeking to pay Chinese suppliers in their own currency. Along with the other items we've discussed, how does all of this factor into your expectations for the yuan?
The RMB will appreciate over the next few years, because China is currently pushing to boost its domestic economy, and if we think that in the past, then many people may think China need to devaluate its currency in order to boost export. But if China is going to push for a stronger role of the domestic economy, China actually need to import more from the rest of the world, and a stronger currencies will actually help to lower the cost of import. Expectation now in the market is that the RMB will continue to appreciate, and China has a initiative to expand the role of RMB in trade settlement. So encourage multinational firms and local corporate to use RMB in their trade payments directly, and in order to bypass the volatility brought by the very highly volatile US dollar and some other global currencies. So if this is going to expand to other parts of the world, for example, from initially the Hong Kong offshore RMB market to some other places, then we will see that the role of RMB will increase significantly in global trade.
Raymond, great comments there. Thank you for your time. That's all from me for another trading week. I'll be back next week with more exclusive interviews. But for now, goodbye and have a great weekend. And to all of our Chinese viewers, we wish you a happy Chinese New Year.